A recent update from Daiwa Capital Markets has drawn renewed attention to Palantir Technologies, as one of the firm's analysts moved to a more optimistic stance on the stock. On Tuesday, the analyst upgraded Palantir Technologies to a buy rating, pointing to growing confidence that the company's artificial intelligence-driven expansion continues to build momentum. This optimism is rooted in the belief that Palantir Technologies is increasingly benefiting from larger and longer-term customer agreements, even as the broader stock price has experienced a notable pullback. Despite years of explosive gains, the stock has declined by over 20% in 2026, following 3 consecutive years marked by triple-digit returns. The upgrade was issued by Daiwa analyst Shigemichi Yoshizu, who revised his view after closely reviewing the company's Q4 earnings performance. After examining the latest financial results, Yoshizu concluded that the underlying business trends remain strong enough to justify a more bullish outlook. Looking ahead to the full year of 2026, Palantir Technologies stated that it anticipates revenue reaching nearly $7.2 billion. This would represent growth of roughly 61% compared to the prior year, underscoring the scale of expansion the company believes it can achieve. Digging deeper into the Q4 results, Yoshizu highlighted that the strength of the performance was largely driven by the United States business segment. In particular, United States commercial revenue surged by 137%, reflecting a sharp acceleration in demand from private sector customers. According to the analysis, this growth was fueled by an increase in long-term commitment agreements that tend to follow the proof-of-concept phase. Once customers complete initial trials, they are increasingly choosing to roll out artificial intelligence across their entire organizations using Palantir Technologies' artificial intelligence platform. This shift has meaningful implications for how the company grows. As customers move toward broader deployment, the pace of new customer additions has naturally moderated. However, this slowdown in customer count has been more than offset by the expanding size of individual contracts. Existing clients are using more of the platform across more departments and for more critical functions. The result is higher overall contract value and more predictable, long-duration revenue streams. In this environment, growth is being driven less by sheer customer volume and more by deeper engagement with customers already on the platform. Expanding on this theme, Yoshizu explained that Palantir Technologies appears to be deliberately prioritizing deeper integration of its software within existing customer operations rather than aggressively pursuing new customer acquisitions. This strategic focus has contributed to a rise in long-term commitment agreements, which tend to lock in revenue over extended periods. Average revenue per user has continued to trend higher, with the United States commercial business once again leading the way. In the near term, the analyst sees a high probability that Palantir Technologies will continue operating under this model, with growth largely powered by expanding usage among current customers. Given these dynamics, Yoshizu believes the company's current earnings outlook looks both achievable and reasonable. To better understand how Palantir Technologies arrived at this point, it helps to look at the company's origins and evolution. Founded in 2003, Palantir Technologies initially focused on providing data analytics tools to government agencies. These tools support intelligence gathering, counterterrorism efforts, and military-related operations, where the ability to analyze complex datasets can be mission-critical. Over time, the company's software has become deeply embedded in artificial intelligence-based decision-making processes, allowing users to identify patterns, assess risks, and make informed choices in high-stakes environments. In more recent years, Palantir Technologies has turned its attention toward accelerating growth in the United States commercial market. The company is increasingly leveraging generative artificial intelligence to expand into industries such as healthcare and financial services. Generative artificial intelligence relies on advanced reasoning models that can synthesize information, generate insights, and assist with complex decision-making tasks. This technological shift represents a significant growth opportunity as more private sector organizations look to integrate advanced artificial intelligence into their operations. As part of this push, Palantir Technologies hosted its 8th Artificial Intelligence Conference for customers in 2025. These events are designed to showcase real-world applications of the company's technology, highlighting how customers are using artificial intelligence to solve practical business problems. Palantir Technologies first introduced its artificial intelligence platform in early 2023, and the conference series has since become a venue for demonstrating live use cases across a range of industries. From a market performance standpoint, Palantir Technologies shares experienced a modest pullback during midday trading, falling by more than 1% to approximately 140.50. Even with this short-term dip, the longer-term performance remains striking. The stock rose 135% last year, following gains of 167% in 2023 and an extraordinary 340% in 2024. These figures highlight just how dramatic the company's ascent has been over a relatively short period. On the technical side, Palantir Technologies currently carries an accumulation distribution rating of E. This rating evaluates how price movements and trading volume have interacted over the past 13 weeks. An A+ rating signals heavy institutional buying, while an E rating indicates heavy selling pressure. A C rating is generally viewed as neutral, suggesting a balance between buying and selling activity. In addition to this measure, Palantir Technologies holds a composite rating of 60 out of a maximum possible 99. This composite rating combines 5 separate proprietary metrics into a single score intended to provide a snapshot of overall stock quality. Historically, the strongest growth stocks tend to post composite ratings of 90 or higher. However, this framework is heavily influenced by traditional valuation and performance measures and does not fully account for forward-looking growth potential. As a result, some investors argue that the rating may understate the strength of companies like Palantir Technologies, which are positioned to benefit from long-term trends in artificial intelligence adoption and large-scale enterprise deployment. Essentially, the recent upgrade from Daiwa Capital Markets highlights why Palantir Technologies is increasingly attractive as a long-term buy, as the company is demonstrating powerful artificial intelligence-driven expansion fueled by larger and longer-lasting customer agreements rather than one-off deals. Despite a pullback of over 20% in 2026 after multiple years of extraordinary gains, the underlying business fundamentals continue to strengthen, with expected revenue nearing $7.2 billion and growth of roughly 61%, driven largely by explosive United States commercial demand. United States commercial revenue surged by 137% as customers moved beyond trial phases and rolled out artificial intelligence across entire organizations, leading to fewer but far larger and more durable contracts. This strategy is pushing average revenue per user higher, improving visibility, and reinforcing a business model centered on deep, sticky integrations rather than short-term wins. With artificial intelligence adoption accelerating across industries such as healthcare and financial services, and with Palantir Technologies positioning itself as a core operating layer for data-driven decision-making, current earnings expectations appear achievable, while long-term growth potential remains underappreciated by traditional rating systems. For investors willing to look beyond short-term volatility, the combination of expanding contract sizes, strong United States commercial momentum, and a dominant artificial intelligence platform makes Palantir Technologies a compelling opportunity at current levels. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.